Okay. Hey, everybody, ladies and gentlemen, welcome to the Investor Shed podcast. I'm Nick Beveridge here with my beautiful co-host. Go ahead and introduce yourself.
Well, hi, everybody. I am the beautiful co-host, Jeremy Kitchen. You may have never heard me before. First-time listener, first-time caller, long-time listener.
Caller. I like
No,
that.
thanks for calling me beautiful. You're looking quite dapper today in your flannel.
Thank you. Yeah, I forgot to heat up the shed this morning.
Yeah.
It was a little chilly, so I'm like, I'm going to go get a flannel.
Are you going to go cut some lumber wood or...
I was thinking after I put it on and I glanced at it in the mirror, I'm like, it's not fall time. What am I doing?
You look like Paul Bunyan.
Thank you.
Yeah, and that's a compliment.
Oh, I appreciate that.
Speaking of Paul Bunyan, though, today, I think we got a really cool episode.
I think it's okay. It's okay. Again, it's not. We're not trying to overdo it, guys. It's a free podcast. We're not gonna like over deliver.
No, yeah. We under promise, under delivers. Exactly. No, I think it's a cool episode because it's really cool world topics that we're talking about.
Yeah, there's a lot going on in the world.
Is there?
Well, I guess there always is.
Right. Yeah.
But this show is mostly about. I feel like it's evolving from real estate investing to just investing in general.
Yeah.
And like not only investing money, but where to invest your time and efforts and all that shit.
Yeah.
So sorry, all the longtime listeners. Hopefully you enjoy.
No, we're still gonna have like real estate investing advice, but just like
for sure,
like business and investing and mindset, they all kind of go hand in hand in this stuff, and you have to kind of take into consideration what's happening in the world.
Yeah.
When you're investing, so these are like tips that people can take nuggets from.
Yeah.
They're not gonna like take this and read this as the Bible, even though we are gonna be quoting things that are from a almost investing Bible.
For sure. Yeah. Speaking of Bible, I was listening to David Green's podcast the other day, and it sparked my memory to like, oh yeah, I got to finish that book.
Okay.
But David Green was going over on one of his podcasts, Ray Dalio's principles of a changing world order, and just kind of stacking up what's going on with tariffs, and it was very informative. And I'm like, man, I remember starting that book. I got like halfway done.
Yeah.
And then probably just distracted with some other book or something like that. I do that once in a while. I'm like, ooh, I'm going to listen to something else. Even though this was a very, very informative book. It's kind of hard to listen to here and there because you're just like, it's a bunch of bad news.
And like a book like that, like, I mean, I tend to get distracted on books where like it doesn't keep my attention, but that doesn't mean it's a good book.
Right.
It's just like, it's a daunting task to actually listen to this thing or consume this while paying attention.
Yeah. And for the listeners that have not read or listened to this book by Ray Dalio, it's called Principles, not just Principles, because there is a book called Principles, but this is Principles of a Changing World Order.
They have very similar titles, very similar front pages on the books too, black and red with the graphs.
And I'm sorry, I mistake that. It is Principles of Dealing with a Changing World Order. Sorry,
Gotcha.
not just Principles of a Changing World.
Sure.
Huge difference there. My bad.
That's probably why you can't get through it, because you can't even get through the title.
Well, it's not a physical book. It's not a physical book that I'm reading through, so I don't see the title constantly. You're listening on audio. I listen on Audible.
Me too.
So it's not like every time I answer it, it's like, we're going to continue Principles of a Changing World Order, or Principles.
Right.
I mean,
Now
Principles
we're
of dealing with a changing world order.
But not Principles, the big one. No. Yeah, I get it. It's a big book to get through, and full disclosure, I have not read it. It is on my list. I just finished a Dave Ramsey Baby Steps Millionaire, so we're on like macro and micro economics on both of our kind of dealings. But let's swing big for this one.
I've been listening to a lot more Dave Ramsey lately.
He has good advice. Good advice for some people.
For some people,
yes, and like they're like even like the Baby Steps Millionaire. Like I listen to it and I'm like, that doesn't work for what I'm doing.
Yeah.
This doesn't work for what I'm doing, but I understand how these principles of saving money and, accumulating your debt snowball, doing all that stuff, can be really beneficial for somebody in over their head.
He's just a really common sense type of financial person. But
sometimes it's nice to hear it again.
It's very common sense, but then I feel like it stops at common sense.
Sure.
With that podcast, but he doesn't really get too strategic with like, how do you actually get wealthy instead of just the common sense of not being broke.
Right. He does a pretty good job of telling you how to get wealthy and like following the steps to become a millionaire. Like if you do these, there's no question about it.
But he recommends investing in mutual funds.
Yes.
Which is such a mediocre investment.
Index funds is what he specifically wants you to invest in, not mutual funds.
Oh, he talks about mutual funds.
Does he?
Quite a bit.
Okay, well,
But I am glad. Maybe I mishear. Didn't mishear. I've heard him say mutual fund. I like mutual funds and all this stuff.
Right.
He definitely says mutual, which makes me like, it's mutual fund.
I think he's more or less talking about like Vanguard ETFs and stuff.
I can get behind index funds. Yeah, sure, because the fees are less.
Oh, I love less fees,
and it's a more proven. Definitely it outperforms most mutual funds almost always.
Right. No, he talks about like just principles. I think it's like 7 steps. First step, save $1,000. Second step, pay off all your consumer debt. Third step, get your emergency savings to 6 months. From there you just start funding your retirement, and Vanguard like that would work for a normal person.
Yeah. What I like Dave's advice on other things that aren't necessarily money.
Yeah.
I like his advice on how to deal with tenants.
Okay.
And like how he acquired his $600,000 university, or $600 million,
$100,000,
$10 million piece of land that he invested in and built this huge campus basically for Financial Peace University, his headquarters. Sorry.
Yeah, for sure.
That's worth, over half $500 million that he owns in cash, which is pretty cool.
Yeah, that's pretty cool.
He gets sued a lot.
Yeah.
And it's interesting to him talk about how he deals with getting sued constantly. Anyway,
lawyer up. That's pony up, buddy.
Yeah. What big takeaways have you gotten from Dave Ramsey?
Honestly, just like this is the book it's basically a part of the Total Money Makeover. So he took a piece out of the Total Money Makeover and he just kind of dove into that. Mm-hmm. I love like sometimes I just need just a reality check of where I'm at.
Yeah.
Where the normal person is at, and just a refocusing, like, okay, I need to put here, or I need to just get rid of my credit card debt. Just like, because sometimes they creep back up.
Yeah.
Right? Like, they crept back up. I had like $3,000 pop back up in debt. We took a couple trips. Things happened. I didn't have the cash available.
Yeah.
Anyway, very, very, very small in like the whole universe. Like, I can pay off $3,000 pretty damn quick, but it's nice to know that, like, yeah, just pay that shit off so I don't have to pay the interest on it. Is nice hearing it again from somebody and getting out of my own head about it.
Yeah. It's hard. It's hard to decide which advice you're going to take when there's so many people online that are very successful, all kind of not necessarily preaching different things, but they all have like slightly different advice on how you can make it. Like, for instance, like Elon Musk, he wants you to get into refining lithium, which is like,
that's above my pay grade.
Probably a good idea, but I don't even know what lithium is. I know it's in batteries.
Yeah, it's in batteries. That's about it.
Yeah.
Okay. I didn't know that's what he tries to.
No, he doesn't. He said it like once or twice.
Gotcha.
Like that somebody would become very wealthy if they just started a lithium refining company, right? Because there's so much demand for it.
Yeah, and he's probably right, but like the average person isn't going to be like, ChatGPT, how do I start a lithium refinement company?
Yeah, exactly. Which come on, Elon, give me some better advice. His advice is just, his advice is mostly don't start a business because it's hard.
Yeah, for sure.
And it's like eating glass and staring into the abyss. Because you're just, as an entrepreneur, you're just dealing with the biggest problems nonstop and none of the enjoyment.
Yeah.
But people like him are used to that, and that's what they thrive in.
Yeah.
And then you could take advice from Ray Dalio, another guy, and this is a guy who is probably one of the most successful ever hedge fund managers.
Sure.
And that's because he did balls deep research into patterns, all kinds of patterns, patterns of like crops and patterns of U.S. history. And then this book is mostly the fundamental topic is, the patterns of empires.
Do you know how old Ray Dalio is?
I don't know.
I have no idea. In my head,
he's probably, I don't know, 60.
In my head, he seems 60, like a 70s. Warren Buffett age type of man.
He's not as old as Warren.
Yeah, but like I see these books, like, and I see like, a Warren Buffett book, and then I see like Principles on the New World Order and like Principles, and it just feels like a Warren Buffett book title. You know what I mean? Yeah.
And it's an exciting title because, we come from the Jordan Maxwell era of
12 Rules of Life.
No, that's Jordan Peterson.
Sure, you're right. Yeah.
Jordan Maxwell is the guy that talks about zeitgeist and the New World Order.
Sure. Yeah.
Stuff. This is but this book is like along those slight topics of like the ultra elite and the patterns in human history that result in world superpowers and how to watch for them and how to capitalize in any cycle.
Sure.
and you have these long seasons with anything, you know, with the humans have a season of, you know, that they go through, you know, birth and growth. And then, you know, summertime is, you know, when they're having fun and having great times and getting everything ready for the, you know, throughout their life. When they become their golden age, and they're in the fall harvest mode.
Yep.
And then eventually winter comes and their body falls apart and they die.
Yep.
And then there's, you know, this,
I've heard that
cycle
before.
And there's that cycle is like with almost everything, and it's with empires as well.
Yeah.
And there's a lot of great research done showing that, you know, in the Americas, we are in a cycle of decline. You know, we're heading towards winter.
Yeah.
It's not much we can do about it.
Right.
There's people trying.
Kind of out of our control as a general normal little person, but
Yeah. But should we dive into it a little bit?
yeah, let's absolutely dive into it.
Oh shoot, where my ChatGPT notes go? Here we go. So let's scroll out of our comparing a Tesla to a Tundra.
We get so sidetracked. We start like researching these topics, and then, you know, I make one point about a Cybertruck bed not being as big as a Tundra, so we had to dive into more research. That's why we're late today, but you wouldn't know that because it's going to come out at the exact same time.
Yeah, I didn't know that.
Yeah, you wouldn't know that.
Okay, for the people that really have no clue, a broad overview of this book and dumbing it down to like a third grade level is like, imagine that you're in a big playground, bunch of different kids, and they're taking turns being the boss. First it was the Dutch kids, then the British kids, now it's the American, and I'm sorry, not kids, Dutch kid, then British kid, now it's an American kid. And every time the kid gets too greedy, they start borrowing too many Lunchables. They don't share. They lose friends. And then a new kid steps in. And that's how countries work, too.
Have you ever borrowed a Lunchable?
Usually you take them, right?
Well, yeah, but I mean, like, even that, like, I've never taken a Lunchable from somebody. I've never even borrowed, like,
Have you ever had a Lunchable that you took to school?
Yeah.
Okay. I don't think I ever did.
Yeah.
My parents weren't like that.
Yeah.
They're like, you get the cheap 40-cent lunches.
Right.
And you have to bring the 40 cents.
And you have to figure that out. That was, yeah. We transitioned to that too. Like, I didn't have a lot of Lunchables, which made me think, like, I wasn't exactly like sharing my Lunchable.
Yeah. I'm kind of glad I didn't have Lunchables, so that's just a bunch of garbage.
Yeah.
Maybe. I don't know. It looked good though.
Yeah. Was school lunch any better?
I think so.
Most of the time, like, it was just like you got a piece
liked
of cheese and smashed between two pieces of bread that was microwaved.
Yeah, pretty good.
It was good, but like,
I enjoyed school lunches.
yeah.
Oh yeah.
Okay.
All the time. Especially in high school, we had these subs.
Yeah.
Like there's a sub line. I know we went to different high schools, but
I had pizza almost every day in high school. They had the same thing.
If pizza was an option every day, that'd be awesome.
Yeah.
Pizza was not an option.
Yeah.
Like most of the time.
I had to pay for that out of my own pocket, though, right? So my parents didn't provide lunch.
Okay.
I just went to school and I bought hot lunch because I had a job, and I did that.
Yeah.
So
Nice.
I could buy whatever the hell I wanted. I'd buy a milkshake and a piece of pizza, and I ate like garbage. Boy, does my body feel it now at 37.
So I guess that's the theme of this show is it doesn't matter what the world economy is doing. If you can make it on your own, you can bring your own school lunch money.
Yep.
And you don't have to eat what's available.
I love it.
Or what your parents pack.
We could wrap it up with that. No, yeah, let's dive into this, though, for sure. So,
Okay.
So basically, what he's saying there is obviously like the kids take turns being the boss, right? So you've got one superpower trying it, another superpower trying it. When a superpower tries it, and then they're too greedy and they don't share well, the minority powers are going to try to rise up and overtake the superpower. Is that kind of where that's at?
Sure.
Yeah.
And I asked ChatGPT if it can just summarize this book in a couple of paragraphs. So Ray Dalio's principles for dealing with the changing world order. It breaks down how empires rise and fall in their predictable long-term cycles based off patterns of debt, wealth gaps, internal conflict, global power shifts. Dalio uses historic examples like the Dutch, British, American empires to show how economic strengths lead to the reserve currency status. Like we currently have the U.S. dollars, the world currency status,
Sure.
basically, which eventually breeds into excessive debt. We are definitely seeing that, and that's why there's an emergency going on with Doge is trying to put out this fire. I think the fire's too big, but
not for us to decide. But yeah,
but they're
I
trying.
agree with you. Yeah,
you
got to start somewhere. Otherwise, the thing just collapses on itself.
$36 trillion is a lot. And I don't think anybody can comprehend how much money that is.
No.
It'd be cool to make examples one day and show like physical examples of the difference between $1 million, a billion,
Right.
and then a trillion would jump out of the ceiling.
Right.
You know,
You just have like pile up cash in here.
yeah.
That'd
But
be
a lot
fun.
of people don't understand. Like they're just words until you actually see the different. Have you ever like seen visual differences between $1 million and a trillion?
I feel like I have, but like it would probably surprise me again if I saw it again.
Yeah. In another episode, we should really just do a bunch of examples of the difference in money.
For sure.
When you're talking about billions versus trillions.
Oh, even, yeah, just the millions to billions, right?
Yeah, millions to billions is similar to billions to trillions.
Right.
Yeah. It's just 1,000.
He was talking, so Dave Ramsey was talking about in his book, like the differences of money. He kind of goes into millionaires and billionaires, and he's like, you know, these tips that I'm telling you will get you to a millionaire. You will be a millionaire. You will not be Jeff Bezos by doing this. You will not be Mark Zuckerberg by doing this. Do you know what I mean? Like this will get you a net worth of $1 million. This will not get you multiple companies that do this that are changing the world. And he just talks about like the differences in money. Like, again, the normal person, the normal U.S. person does not have $2,000 saved to their name. And if you take what Americans make versus the whole global economy, we are closer to Jeff Bezos than they are to being close to us.
Okay.
Does that make sense? Like,
Yeah.
across the world, we make a lot more money, even as like a minimum wage person in the United States,
Oh, we
than
sure
the
do.
world population does. Like, a lot of people just scrape by with pennies on the day trying to figure out where the next meal comes from.
We've got it great for now.
Yeah, exactly.
Yeah. And the key is for now.
For now.
You know, I didn't finish talking about the summary. Sorry, it's only 2 paragraphs. So we kind of stopped right when we were talking about the economic strength, reserve currency, which eventually breeds excessive debt. And then right after that, this is where we stopped. So inflation, talks about inflation and decline. So he argues that the U.S. is late in its cycle, facing internal division, unsustainable debt levels, and increasing global competition, especially from China. So the takeaways, big challenges are coming financially, socially, and geopolitically. And investors need to think in terms of decades, not just market cycles.
Interesting.
So Dalio recommends positioning for a world of more volatility, weaker currencies, and the rising conflict between countries and classes.
Sure.
His framework helps you understand not just what's happening, but why, and how to make smarter decisions as the world reorders itself, which is kind of scary to hear.
Yeah.
In other examples, you know, Ray Dalio he's a hedge fund guy.
Yeah.
Very smart, but the interesting thing is that you can buy real estate as a hedge against these kind of economic pressures that we're going to feel.
Right.
Because we're going to have unsustainable debt levels and a currency collapse potentially.
Yeah.
With that means that, you know, your house or any real estate that you own, basically if the debt goes to, the debt remains
Right.
in place, but if the debt is worth hardly anything these days, you know, if $1 million is worth a fraction 10 years from now of what it is today, that means that debtors, it's good news.
Yeah.
Good news for debtors because they get to keep their real estate.
Yep.
And their and money it may be changing
Right.
in general, but what you owe to the bank or lenders is in USD.
Yep.
Not nominal value,
Yep.
if that makes sense.
Yeah. Not in Bitcoin or not some other fiat currency.
You
or
owe
whatever.
a certain dollar amount that's fixed, even if that dollar amount is worth hardly anything in the future,
Right.
which makes things pretty exciting for debtors.
Sure. Yeah.
Anyway, and also I wanted to give examples. So, we talked briefly about it'd be cool to like give an example of the difference between millions, billions, trillions.
Sure.
So think of it this way: if you wanted to save up $1 million, and then let's say that $1 is every second.
Okay.
1 million seconds. If you can save $1 a second, $1 every single second,
Right.
you will have $1 million in 11.5 days. If you wanted to save up $1 billion, it would take you 31 years, 31.7 years.
Sure.
That's already a staggering difference,
Right.
right?
Oh yeah. I mean,
So if you had to
31
save
years
$1 every second, save $1, but I want to have $1 billion, it would take you 31 years as compared to just 11 days.
Right.
If If you needed to save up $1 trillion, 31,709 years.
Wow.
I mean, that's a staggering difference.
So you go from 11.5 days is a million to 31,709 years
is a trillion.
to trillion.
Let that sink in.
That bar is so huge.
A trillion is almost 3 times longer than any of all recorded human history in seconds.
Wow.
So
even as human history has evolved, we've had like 1/3 of a trillion seconds ever.
yeah, and
That's a long ass time.
here's other cool examples. If you had $1 million stack, if you had $100 bill, $100
bills. Okay.
and you wanted $1 million in front of you, and you wanted to stack it up with $100 bills, the stack would be 3.5 feet tall.
God, that'd be a flex.
So it'd be in this shed, about halfway to the ceiling, $1 million in $100 bills.
Right.
1 billion would be taller than the Empire State Building,
Wow.
and 1 trillion would be well into outer space,
Yeah.
631 miles high.
That stack would fall over before.
So this stack, instead of going vertical, to the size of a building,
Yeah.
just picture driving the entire state of Texas,
Yeah.
and that's how big that stack of $100 bills is.
Wild.
Now picture 37 of those, and that's how much debt we're in. And that's not including the unfunded liabilities.
Right. Right. What are the unfunded liabilities?
That's like payments that are eventually going to be owed to Social Security, Medicaid, all that stuff.
Gotcha. Okay.
Unfunded liabilities. So they're not funded, but we're liable to pay them.
Right. Right. That's
Somebody correct me if I'm wrong on that.
yeah. I mean, we're not going live, so whatever.
We're not going to edit this.
We're not going to edit it. Whatever.
But yeah, I mean, just it's hard to think about it when we just talk about trillions. And Doge's goal, the whole point of Doge is not the whole point, but what they're trying to do is cut our spending down by $1 trillion this year and maybe another trillion next year.
Yeah.
And it's a lot of billions to go through.
Yes.
And cut.
Yeah.
Hey, quick commercial break here. Thank you so much for listening to this podcast. I really do appreciate it. If you want to give back, let me help you buy a house, or I can help you sell a house. It's the only way I make money when I'm not investing in real estate. I don't make money on this podcast or the events I do, but I do make money only when I help people buy and sell houses. So if you're looking for your next investment and you're here in North Idaho, I want to help you personally. If you are not in North Idaho, I can still help you out. I have a vast network of referral partners all across the country, and I can find the right real estate investor savvy agent for you so you don't have to. It doesn't cost you a thing. Thank you for your support. Back to the show. As strategically as I can without having society collapse.
Right. Yeah, and I think, I agree with what you said. I think the fire's too big to kind of put out, but you really got to start somewhere with it.
You got to try.
Yeah, you have to try.
Because I feel like most people just don't want to try.
Right.
And that's a great way to ensure the collapse of all of our well-being.
Right.
If our currency goes to pretty much zero, we have to start over with some other world currency.
Right.
That means we're going to have a lot of poor people in the U.S.
Right.
Because there's a lot of people in the U.S. that don't own real estate, that don't own other assets. They just own a bunch of consumable junk that they can eventually trade or whatever. But the biggest losers are people that just save money and put it in the bank.
Sure. I would 100% agree with that. And like you talk about how the dollar could collapse, like, and we've talked about this before, specifically Nick, but like the dollar, like if you look at like how much a dollar is worth, it's not exactly like thriving right now.
Yeah.
Wasn't it like you're worth like the dollar is worth like 3 cents of what it used to be or something like that? So that's why there's more money, more inflation, more money being printed, your dollar's worth less.
Yeah.
Yeah.
So I'm going to ask all-powerful AI.
All-powerful.
A very interesting question here. You let me know if this is too leading. What's the likelihood, percentage-wise, of the U.S. dollar collapsing?
I don't think that's too leading.
Collapsing in my lifetime. 38.
Nick's spelled collapsing.
Yeah, it knows what I meant.
Yeah, you're close enough.
Okay, so likelihood of a total collapse of the U.S. dollar in your lifetime in the next 40 to 50 years? Geez, you think I'm only going to live another 40 to 50 years?
Science says you're going to live till you're about 80.
Oh my God, I thought I was going to get 150. Okay.
That's the eye-opening thing for Nick.
So low probability. It says probably under 5%, but partial loss of global dominance or significant devaluation. That is much more likely, maybe 30 to 50%, depending on how things evolve.
Sure.
Okay, so 50-50 chance of significant devaluation. How low? Okay, let's ask how significant.
So, yeah, but just like for context, like
give an example in 30 years.
yeah, Nick's talking about this, and he's just seeing what the likelihood of the dollar is that it's going to collapse, and I would agree with what the machine's spitting out right now. Like, it feels so unlikely that our dollar would go to absolute zero.
Yeah,
I
so
mean,
they're
like
still
worst
gonna
case scenario, they'll keep printing money. People will keep getting raises. Like they'll find a way to make it so like we're still have a pulse. You know
But
what I mean?
5%, that's 1 in 20.
That's 1 in 20.
If you have 20 people in the backyard and they're like, everyone grab a stick, someone's gonna die. If you're that person that dies, that's that 1 in 20 chance.
Yeah.
That's not zero.
It's not zero. Nothing ever is zero. Like my odds of like getting attacked by a honey badger are low. They're never zero.
Yeah. Okay. So 30-year prediction, realistic scenarios. Let's say that 2055 and you're 68 years old. So this is 30 years from now. Correct. Here's a probable, non-doomsday scenario, but probable. A gallon of milk costs $10. A medium home in Coeur d'Alene that's $600,000 today is $1.5 million. 30 years from now. Sure. The realistic scenario based off history, based off our money patterns, based off inflation. So if you're buying a 600, which is actually, I mean, that's kind of like the very average price point right now.
Yeah, yeah.
If you're buying in Coeur d'Alene,
I would gawk at it, but
ChatGPT just guesses 1.5 million.
Yeah. And that's based off historic data showing that, like trends of real estate and how it actually increases over value over time. Usually, 6% increase in value per year type of thing. And then that compounds. So it did the math.
So it's guessing that your dollar's still going to work, but it stretches half as far as it used to in real terms.
It's basically what I said too. I'm like, the dollar's still going to work, but they'll just print more and it just won't do as much.
Foreign goods and travel become more expensive. The US dollar is still in use, but maybe it shares a global reserve status with BRICS basket, gold-backed crypto, or the central bank digital currency, CBDC. I don't even know. Is that a real thing right now?
I mean, probably.
Okay. I'll have to look into that. Debt interest payments dominate the federal budget, making U.S. bonds less attractive and forcing the Fed to keep printing to fund it.
What they're doing already.
So things will just likely, okay. So likelihood breakdown, your lifetime horizon. So this is interesting. A medium devaluation of 10 to 20% already happening is what it says.
Right.
The likelihood is 90%, but it's already happening. So wouldn't they just say 100?
Well, I don't think the machine wants to tell you like 100% in, because there needs to be room for error in a lot of this stuff.
Well, this is interesting then. So this knows that today we're in the springtime, 2025, late spring. I know when this episode comes out, we'll be in summer, but it's basically saying there's a 90% chance that the US dollar is going to be devalued by 10 to 20%. So just that alone, buying hard assets might be a hedge. And moderate, so loss of 50% purchase power is very likely if the debt continues climbing and the U.S. dollar dominant erodes. Major, so there's a 25% possibility, 1 in 4, that we have possible continued defects, or deficit, possible with a continued deficit, geopolitical shifts, and no reform. So if we can't get reform, there's a 25% chance of that. Sure. Meaning, like Doge isn't able to run. Maybe they get Elon arrested, and they put a stop to all the government's, cuts. That's a possibility. And then, basically a 3 in 4 chance that our deficits will be devalued by 50 to 70%. That's a big number. Sure. 70% collapse. And then hyperinflation, total collapse. There's a 5% or less chance. Very rare historically for countries with military, land, and tax powers like the U.S. Yeah. So that's interesting to hear because we do have a very large military. Right. But we also have systems like talking about land and taxpayers, right? Like, I mean, like the fact that this would ever be a total collapse. I mean, the government's it doesn't matter what they're doing. They're going to make sure we pay our taxes. Yeah.
Right. So like if their deficit is 37 trillion or whatever it is, fine. But they're going to still continue to make sure they're collecting from the average person. So like a total collapse again does not feel likely based off what we have in place to stop that.
Yeah. So real world translation for you, that $300,000 rental might need to be worth 600 grand plus just to keep pace. Your monthly cash flow needs to adjust for purchasing power. So basically $1,000 buys today versus in 20. This is picturing that we're 30 years out, 2055.
And this is so sorry.
Yeah, go
I'm
ahead.
going to cut you off here real quick.
You should.
So with this hypothetically, right? I mean, obviously, real estate is a very continued hedge against a lot of things. You know.
Yeah.
Hypothetically, if your dollar's worth half as much, I think a lot of people, if this case ever like starts to like tremble and the economy just starts to take a huge shit, I think rentals, the only thing that'll be in trouble with them is how much people can afford for your rental, right? So if your mortgage is $2,000 for simplicity, right?
Yeah.
And right now you're charging $2,500, so you're making a little bit of cash flow, right?
Yep.
If money keeps being printed and people can't do that, and then your dollar stretches half as far, maybe you could only rent that thing out for $1,400 in the future.
No, I think if you're thinking of this wrong, maybe in the future you won't quite get all the appreciation.
Sure. Okay.
I think you're definitely going to get. No, I shouldn't say definite.
Right.
Rents could go down, but within the scenario, rents would go up so much, but maybe we can't charge as much as we as the percentage allows.
Right.
So like I don't think it when we have this happen, rents aren't going to go down.
Right.
In general, because it just means that their dollars aren't stretching as far.
I just think of the average person, if like the average person continues to not be able to get ahead, and your money is worth less, that could potentially happen. I don't have a magic wand, of course, but it's something that you have to look out for in any sort of investment. It's not just like, you know, like don't buy a rental because it could go down. Like that's
right.
part of the gambit.
Well, to give you an example, like this rental I bought about a year ago on seller financing, and I got a $2,300 payment on here in Hayden, and I have it rented out right now for. Now we have new long-term renters that moved in, and there was 2 people that wanted it, so there was demand. It's renting for $2,600 a month.
Yep.
Basically, what this is saying is like $2,600 a month. 30 years from now, you probably are going to get closer to $5,000 a month.
Yeah, and I agree.
And what you're saying is they probably can't afford that, but that doesn't mean it's going to be $1,400 a month in the future. It might be more like $3,000, $3,500. If that does that make sense?
Yeah, absolutely makes sense.
So it's, or maybe they would be able to still afford that, but they have to sacrifice other things. Maybe I would imagine 30 years from now, people are going to, like, the minimum wage is going to go up.
Sure.
Or people in general are going to be getting paid more because people have to charge more.
Yep.
I feel like the ball does keep getting moved forward, but not just the ball. Like everybody's kind of coming at the same time. Some are late, some are behind. Some jobs pay way less than others.
Right. And I agree with you 100%. I'm saying in the event of like a world devaluation, or like this deficit gets so high that like there's an actual breaking point with this, like you might see some of that stuff soften.
Yeah.
But I don't again have a magic wand saying that. Like, of course your rentals are going to accumulate wealth and appreciation, hopefully in the long term, but that might not happen in the future.
True.
It's an investment with everything you do. So
I think what we really just got to pay attention to is like, how can we lock in today's prices?
Sure.
For the future.
Yeah.
And that is with the magic of buying real estate with debt.
And fixed debt. Yeah.
With fixed debt. And that's how we can lock in today's prices, which seem very high.
Yep.
But 30 years from now, they might seem super cheap. Right. $600,000 for a house, that might be like, dude, how'd you get
pennies on the dollar for that thing? Right, exactly.
You know, maybe 30 years from now,
and
like we'll be wholesaling.
Have shown us,
wholesaling fixer-uppers for $600,000.
Right.
Probably might not be too uncommon.
Right. And again, that's what trends have showed us work. Right. Yeah. You buy, if you bought 20 years ago, you own the property outright. Great. You made a lot of money. But in the event of like a world catastrophe where the U.S. is no longer in like control or the dollar has no value, I'm saying like worst case scenario, that 5%.
Yeah.
That like world domination event happens, something could happen with your rentals. But again, I don't know.
True. Okay.
I still think like.
But here's the big difference. The U.S. dollar has some sort of value.
Yep.
And it's always going to have some sort of value. Maybe not always. Maybe it'll get delisted someday.
Right.
Completely, like a dinar.
Right.
Iraqi dinar or something like that.
Yeah,
but like, a house is going to have value.
Sure.
maybe it's worth so much Bitcoin. Maybe it's worth so much gold. You know, maybe it's worth so much silver.
Sure.
But it has utility value because it could always, it's very useful. US dollar may not go as far, but a house is always going to go just far enough to house somebody.
Right. But how can somebody pay for that house if the dollar has no value, I guess is what
pay silver.
Yeah.
Or pay little chunks of gold.
Right.
Pay me in some Dogecoin. You know, there's going to be other, I think there's going to be other forms of currency.
Do you think the average person is going to have those other forms of currency?
Oh, I think people will adapt.
Okay.
I think there'll be some disruption for a long time. A lot of people they don't want to. I think there'll be a slow transition to some other currency. That's my guess. My prediction is that I really hope that it's not going to be like, you know, India and a lot of people sleeping on the streets and shitting all over the place.
Right.
That's not everywhere in India, but you know, I feel like
that happens in the
I feel
United
like
States
we're just going to
too,
go through probably another deep depression. The value of the US dollar is going to just continue to go down as they print more.
Yeah.
And but that doesn't mean that all these other things that we can make and that we can use don't have value. And I think the hack is just to buy stuff that has intrinsic value over time.
Yeah.
And be able to barter that for whatever type of value is available in the future.
Sure.
Or means of currency exchanging.
Yeah.
If that makes sense.
Yeah, absolutely.
Yeah.
And again, my nose is a hypothetical, of course. Like, if people can't afford to pay, that means they can't afford to pay for your place. And if they can't afford to pay for your place,
I think people will there's always, if I had to guess, I think there's always going to be a market for
100%.
People wanting to buy things, but it's the US dollar that may trade places. We may be paying with the yen one day, or the euro, you know, or the peso.
Yeah,
unlikely, but
I think
it's possible. You know, we could
change.
There's other currencies out there.
That change in and of itself, where like the U.S. like changes currencies, would be such a like devastating piece to our country. We're freaking out about Elon Musk trying to save money right now. Imagine what's going to happen if the government came in and said, all your money needs to be converted into yen or the peso right now. Yeah. People are going to fucking lose their shit.
People and similar things have happened in the past where people, you know, like the government says, hey, trade in your gold. Right. You can't have it anymore.
Yeah, it was illegal to have it for a while, right?
Yeah. Trade in your gold. The dollar is valued now.
Right.
Give us your gold. It's no longer redeemable in gold. Yep. Give us your gold. Like things like that have happened in this country in the past.
Yeah.
Most of us just never lived through it.
Right.
But it doesn't mean it's not going to happen again or could happen again.
Right.
I just think a well-diverse portfolio, don't put all your eggs in real estate.
Of course. Yeah.
Or you can. You can look at it with a grain of logic and be like, well, people are always going to want, you know, it's one of the big three fundamentals, you know, sleep. The people need a place to sleep. That's a house.
Yep.
They need to eat.
Yep.
And they need to have water.
Yep.
If you're invested in one of those big three things, there's a good chance that there will always be a market for it.
Yeah, I agree with that.
I think.
Yeah.
Unless we found a different way to house people in the sky.
Right. Which might happen, you know.
Could happen.
Yeah, I don't know.
Hey, we had these $30,000 spaceships.
I've read enough sci-fi books where they start building sky cities.
Yeah, skyscrapers in New York.
Like sky cities.
Yeah, sky cities. Yeah.
Like platforms above Earth.
Yeah.
Where they bring up soil and...
Yeah. It's possible.
Yeah. Yeah.
I mean, people need to bring that topsoil somewhere.
Right.
Especially when they're, you know, trying to get their site plan ready for a new build.
Yeah. So like let's kind of like just package this up for everyone real quick. Like, so what can an average person do to stay ahead of the curve?
You know what? I think you just got to get in the game somewhere.
Yeah.
Get in one of these games. Get in the real estate game.
Start doing
we are.
Start doing something. I think that's a good piece of logic. Like,
yeah, I think the biggest call is like, don't put all your eggs. If you're just saving money, that is probably one of the riskiest things you can do based off this topic that we're talking about. Because I think the biggest thing that's at risk, other than our democracy, other than everything, I'm just kidding. What other people, you know?
Yeah.
That's a common theme. I think one of the biggest things at risk is the value of the US dollar.
Yeah.
The good news is that there's so many things you can put your wealth into, how big or how small your wealth is.
Right.
And so there's a couple of things that we can give examples of what we do. Like I'm on a subscription for silver. That's one small portion of my money that every month I get new coins in the mail, silver coins, and I don't have to think about it. It's just an automatic subscription. Every Monday, I get new Tesla shares.
Cool.
I have a subscription set up, and I've had that for a year now or so, where I just get new Tesla stocks, and the value of that does go up and down like crazy too.
It's volatile to a point, yeah.
But I'm trading out my U.S. dollars for stock in a company, that I feel like is going to be around for a long time, and is doing more than just cars.
Yeah.
So I put a very small portion of my wealth in that. I put a large amount of the money that I get into fix and flips.
You do.
That will eventually, once I get a certain amount of money, I'll buy my next rental. I have 6 rentals right now. I will continue to acquire more.
Yeah.
Because I feel like that's a good, like if I can leverage the bank's money and my money to find something that cash flows where it's not negative every month. And it's another asset that's spitting out a little bit of cash flow. I don't want it to rob from me.
Right. So that is a play for some people.
To. Yep.
Like
I put a lot of my money, almost a few $100 a month goes into insurance policies.
Yeah.
So if I die, there's a lot of people taken care of.
Yep.
And things are going to be fine. There's some other investments too, but how about you?
Some of the same stuff, some of the not, of course, this year particularly, like I take a W-2 for myself. I take a very small W-2 for what my actual company makes. Yeah. Which is fine because then I can use the rest as a profit payment and pay less taxes and pay less Social Security and Medicaid on that. So that's the play there. But, I'm doing what you do. I don't invest in just Tesla. Most of my automatic investments are through Vanguard VOO, which Tesla is part of course. So it's part of that index. Yeah,
Vanguard owns the second largest amount of Tesla other than Elon.
Yeah. So like the cool thing about buying like these index funds that I find cool is it's not putting all your eggs in one basket, which works for you, and I love that you do it. And I invest in individual stocks as well, but most of the time I'm just like, these people know the market better than I can, and the fact that nobody ever outperforms the market for like a single stock. Like if you can beat the stock market odds, you're kind of.
I'm gonna say nobody, but not a lot of people.
Not a lot of people. It's nice investing in like a thing that like, okay, these are the top 500 companies that are performing. They will drop out as they need, and they will put new companies in as needed. And I don't have to do that research.
Yeah, that's true.
And I don't have the time for that research, right? To be like, I don't have the time to be a day trader. I very rarely sell a stock. Sometimes I'll sell to take a loss, and then rebuy the stock. I'm like, okay, I'll take the $400 loss just so I can get a tax write-off on $400, and then I'll rebuy that stock directly the same day.
Okay. All right.
I don't do that often, but sometimes I'm like, maybe I'll take.
You also invest in collectibles that you trade. Do you want to talk about that a little bit?
Yeah. So and then
you're pretty proficient at that.
Yeah, that seems to be going pretty well. But I also, real quick, I do invest into Bitcoin every single day, no matter what.
Oh, okay.
Yeah.
Yeah, it's like a roundup.
Yeah, it's $2 every day into Bitcoin,
$2.
So it's $14 a week.
That adds up.
It does add up, Yeah. So I almost own like 1% of a Bitcoin now, which is cool.
Almost 1%.
Yeah.
Nice. What? And how much is a 1%? Like $1,000 worth?
Yeah, like 800. It's like Bitcoin's.
How long have you had that set up on automatic?
Half year.
Okay,
that's
cool.
But I also I've had more too, and it adds up, and it's such like a little tiny piece.
Yep.
I also invest into. I have a high yield. That goes into different buckets. So I do save for my 6-month emergency savings plan. I do save for my IRA next year. I'm maxed out this year. So automatically from my paycheck, it goes into an account that's like ready. So next year, January 1st, 2026, I have $7,000 ready to go. Boom, right into my IRA.
Yeah.
Yeah.
Okay.
And that way I don't have to think about it throughout the year. Like I'm getting ahead of the game 1 year with that.
Awesome.
Yeah. And then, like you said, collectibles a little bit. So Pokemon cards, sports cards seem to be a pretty cool. That's more of a fun business for me.
Yeah.
That's like
hustle that you do make money off of it, right?
Yeah. Oh yeah.
And then do you reinvest all that? Like, are you ADD about like reinvesting that money into the cards again, or do you just spend it? Is that your fun money? How do you?
A lot of it goes into a few things. So like last card show I did, I made $5,600. I paid down a lot of debt. So
that's awesome.
Yeah. I paid down some credit card debt I had.
You made that in one weekend, just trading cards at a show?
Day. Yeah.
Oh, in a day.
Yeah.
Nice.
Yeah.
Yeah, that's got to be it. That's like being at the casino, but winning for sure.
It's so much fun, like coming home with like the biggest stack of money you've ever had in your life.
That's awesome.
Yeah, and it's fun wheeling and dealing.
Did you get your dick sucked that night?
I did not.
Dang it.
Yeah, I did give Sam some money though. I'm like, have some money, beggar.
Okay.
Have
Sam,
a few $100.
Step it up, Sam. When he brings home a wad of cash, you need to represent.
Represent. Show up or shut up. No, but that's something that like I am trying to find ways to automate that too and like manage inventory. That's kind of what I've been tinkering around with this weekend.
Yeah.
Like, okay, what I buy it for, how much is it worth, what I actually sell it for. But there's a lot of like formulas that need to go into that.
Yeah.
And then finding something that's like, okay, like that keeps up on a marketplace automatically for me. I haven't exactly done that yet. Mm-hmm. That's what I've just been trying to research. Like, okay, so I don't have to research this card 5 months from now. What's it worth? What's it going to be worth? How's the market live updated?
Yeah.
But at the card shows is cool because I can go and I can find a live price and I'm like, okay, I can pay you 60% of that live price.
Okay.
And people will say yes or no.
Yeah.
And then what I've been doing.
Cash right now.
Right. I'll give you cash right now for it. Obviously, like as a business,
Yeah.
I have to make money. I cannot buy a thing at marketplace. It's like flipping a house, right?
Yeah.
You're buying for 60 to 70% after repair value.
Do you think that you do so well in these shows because you've got like a better personality and execution skills than a lot of these people walking around? They're too nervous to maybe ask for money or like ask for deals.
Very possibly.
But most of them would rather just, I want that card.
Yeah. A lot of them,
Whatever.
it's a consumer mindset of like,
Yeah.
I'll pay for that card because I like.
And you're
that
going
thing.
in there as an investor.
I'm going in there as like a business person. Like, yeah, I know in my head because I've done this a few times now. Like Pikachu cards sell, Charizard cards sell, right? So these cards that are selling, those are the cards I'm trying to buy. From
You're
people.
trying to buy those.
Yeah. Sometimes people will give me like a binder full of shit.
You're looking for the 3-bedroom, 2-bath, 1,400 square feet. Under 450.
Yeah, and sometimes people are like, I want market value, and I'm like, well, we're not going to make a deal, and that's okay.
High demand items.
Exactly. Okay. I try to find the high demand ones so I can have them at my table. But my niche, I think, is like, since I am trying to buy low, I'm also trying to sell it a little bit low.
Okay.
Right. So like, if the market price is $50 on a card, maybe I have it at my table for 42.
That's
which
a house
means
flipping strategy.
Yeah,
sell a little bit low, and it creates a lot of quick.
Exactly. I'm trying to quick turn around the stuff. So, if a card market is 50, I'm trying to sell it for 42. That means I need to buy it for like 26, 27.
Okay.
And that happened a lot where I'm like, yeah, I'll buy this, but here's my price. You don't have to take it.
Yeah.
Sometimes people would take it.
Right on.
And then like 5 minutes later, I'd sell that exact same thing.
Yep.
For the price I wanted. I'm like, all right, I just generated $20 off of nothing. That was cool.
Nice.
Yeah. And just a very tiny scale, which it was fun. I am going to skip the next couple card shows, I think.
Okay.
They're taxing.
Really? Why?
It's you're at a table.
Mentally exhausting?
You don't get to go pee for like 9 hours.
Oh, because people might steal your shit.
Well, there's nobody at my table to watch it, right?
You need an assistant.
I need an assistant.
Hey, next time you have one, can you invite me?
You want to go?
I'd be happy to take your place while you pee. We can stay hydrated together.
I love that. It's
And
pretty
I
wild.
can
You could
be your
probably talk to a
assistant.
lot of people too about real estate.
I'll just be your assistant.
Yeah.
It'd be great.
Okay. I tried hiring
I'm gonna have to
Kyson
pee
do
a
it.
lot too.
I tried to hire Kyson to do it last time, and he just kept going and buying old shit with other stuff.
I would not do that.
Yeah.
I would stay there and I would bark at people.
It's yeah. No, last one I did, I think there was 108 tables. Like I said, I generated about $6,000 of revenue.
Okay.
And again, I was like, okay, if there's 108 tables and I'm the median price here that made that much money, that means there's over $600,000 like being thrown around in this place.
There's no time to pee.
There's no time to pee.
Right. Peeing costs you $100 every time.
It could cost me more.
That's why you need me there.
Yeah.
You can go pee. I can help sell some shit while you're gone.
I love it.
You get back. I'm like, nothing sold, but you're like, things are missing.
Nothing sold, but I gotta go.
My pocket's slightly better. I'm just kidding. I wouldn't do
Yeah.
that.
I know.
It'd be funny if I did.
No, it's a fun time. I consider that more of like a fun hobby right now versus like a huge money
When's
maker.
the next show?
I don't know. I know there's a couple in Coeur d'Alene. There's one in Missoula coming up, but that one felt like a little bit of a jaunt for me.
Why is that?
I don't know, man.
That's a new market.
It is a new market. I guess it's a good card show. Maybe I'll look into it. But
Check it out.
yeah.
I'd go with you.
Okay.
Yeah. Always looking for an excuse to get out of the house.
Right. You could find a lot of yeah. And what's cool, like I noticed the last card show I did, a lot of people are trying to. Nobody wants to go home with inventory. So a lot of people are willing to just like, hey, do you want to like buy the rest of my table, like so I don't have to like.
Really? Okay.
Yeah.
Yeah.
So I mean, I made a couple deals at the end of the card show, and
Nice. That's great.
yeah, actually, like the last
Was this
hour.
at the
made-
fairgrounds?
No,
last
this
time?
last one was in Spokane at the Performing Arts Center.
Oh, okay.
Yeah.
Yeah. Like right in the main stadium area?
I don't know.
I thought it was like set up like a show.
Yeah, it might have been in one of the event rooms, but it was at
okay.
that place.
Cool. Should we wrap it up?
Yeah, let's wrap it up. So go invest in something, find something you're passionate about, find something you know about, and build up your hedges like Ray Dalio.
Yeah, and be fearful of that U.S. dollar and try to find things that might perform a little bit better.
Yeah.
Because ChatGPT says it's going down.
It's
down, baby, bye.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.